we're going to get into a little bit of a technical side of things, but it's something that you really need to know about. And it's going to be talking about bonds and sureties and different things like that. With all the changes in the tariffs, it's, everybody's been riding a roller coaster, Lalo, and it's been, things are kind of settling down a little bit. And now it's like, okay, what's the repercussion of it? It's kind of like throwing a rock into a calm little pond there. You see the ripples that go out there. Well, one of the ripples is going to be talking about bonds and surety and risk and all that kind of stuff. So, as far as getting into this, anything you want to try and add before we introduce our guest?
Yeah. So before everybody tunes out and says, already heard this episode, you haven't. So
yeah, that's true.
That we already had a bond show earlier. It was, we were asked, what about this? What about that? So a bunch of different points of views and angles and deeper dives. So this is more like the 201 version of that episode. In other words, we're going to get into a lot more detail. It picks up where we left off, per se, and also digs into other areas that were not even discussed previously. So there's a lot more to the bond. And like I said in my previous episode that we recorded, I'm nowhere even near qualified to even comment or talk about this because that's really never been my area. And I know that the stuff that I've done, requires bonds and all my clients, of course, that are importing require it. But again, I don't know much about it, and I'm glad that we do have experts. So we've been to several conferences, and we always run into these folks from Roanoke, bunch of different folks from there. It's a big company. So anyway, so we've had that luxury of being able to get someone from Roanoke to come on our show for that.
Well, it's Colleen Clarke is our guest today. Colleen is a good friend. She's been in the industry. She's smart as all get out, as most people will know her. She's been around for quite a while and heavily involved in trying to affect change positively, I guess, in the industry one way or the other. There's also, just because of the nature of the surety company, sometimes you have to be in a defensive posture to make sure that some of the regulations or new legislation that comes through doesn't put surety companies too much at risk, or other companies, I guess, right? Welcome aboard. First off, Colleen, it's good seeing you and good talking with you. It's been a while.
Good to see you as well, Andy and Lalo. Thanks for the invite. I appreciate it.
Yeah.
Bonds are my passion. I've always said bonds are not boring. Well, I'll tell you right now, they're really not boring now.
Yeah. No kidding.
Well, it's one of those things where so much with the talk of tariffs and different things as far as U.S. imports go, and tariffs obviously going up, it also then translates into your bond amount needs to be increased, and that's going to cost you more. But the other side of the bond, if you've got a continuous bond, it enables you to streamline your clearance process, so you don't at least technically have to have a single entry bond for every single entry, as it would go.
Right.
But with that, bonds are one of those things where, and I guess it's a necessary evil. I hate to say it that way, and forgive my connotation here, but it's just one of those things where it's insurance for the government, I guess, for lack of better terms, isn't it?
Yeah. So as far as the history of the customs bond, it's been around for hundreds of years. 1789, when Congress passed the Tariff Act, they started to require bonds. And bonds, we're going to talk more about import bonds today, but the customs bond handles virtually every type of customs transaction there is. You have ISF, you have automated manifest filing requirements, the 24-hour rule, import bonds, of course, in-bond transactions, which are for carriers, drawback, warehouse, foreign trade zone. So they really cover the gamut of any international transaction. But again, like you said, we're going to concentrate on the issue with tariffs and the import bond. I always like to bring up something that's been said for many years. My mentor coined this phrase that the U.S. customs bond system is held out to the world as really the gold standard, allowing the release of imported goods with worrying about the collection of duty and reviewing admissibility issues until later. That's the liquidation cycle, right? So the surety really is a collector for the government.
Well, one of the things too is it enables you to protect your cash flow of your company, because one of the other things, without a bond, you would normally, I said normally, or in days gone by, you'd almost just go ahead and post a dollar amount and take however much money that is needed that the government thought that you would need, and supply that to the government in a non-interest bearing account type of scenario, or pay the expected duties and then adjust it after the fact. Well, this is a bond is a way for layman terms, for those of you that may not go on, oh, I don't know if I want to listen to this, you need to listen to this a little bit more. Is this understanding that is a bond is a way for you to validate that you are financially and corporately a good citizen, and you're bringing in something and you're submitting it under whatever the transaction may be, and you don't have to post that money because you've got this bond behind you backing you up. Is that a good way of, I guess,
Sure.
putting it?
Yeah, I mean, many other countries, they don't have bonds, so they have to pay the duties up front and wait for release of their goods because there is nothing backing that import, right?
Right,
When there's other
right,
government agency requirements, the admissibility factors, right, as well. And customs really does retain 90% of that duty risk. Customs bases the bond, the continuous bond, on 12 months of rolling 12 months of total duties, taxes, and fees, and the bond is only 10% of that. So if you think about it, customs is retaining 90% of that risk if an importer fails to pay the duty over a certain time.
all right. So let's talk a little bit with all of the trade negotiations that have been going on, the reciprocal tariff type things that the Trump administration have put in, the negotiations of different things, the last minute changes of from zero duty to 50% duty to, it's going up and down like a roller coaster. As far as the things that you're looking at there, what has been the overall impact as far as the industry here?
Well, when there's higher duty payments, that means higher bond amounts, right? Based on the calculation, 10% of those total duties, taxes, and fees. So customs does run an insufficiency review of every continuous bond on file with customs the first week of every month. So we're through 9 months here, and they look at they go backwards. They don't have a crystal ball to know what an importer is going to bring in or pay in the next 12 months. So their insufficiency is really based on old data.
Right.
They're looking at, and by the way, it's by entry summary date, not entry date, and it's paid or payable because of monthly statement.
Hmm.
They're not just looking at the paid duty; they're looking at what could be due. Year to date, there have been 58 mandated increases issued by customs. Last year, for 9 months, it was 4,727
All right. So for what that means is that there's been almost 17,000 importers, I guess, or bondholders
bonds.
that customs or CBP has requested them to increase the bond amount.
Correct.
Right.
That's a
So
350% increase over last year at this time.
So what that means for all of those from an executive level, folks, and especially the CFO, you've got to make adjustments into your budget to accommodate the increase in premiums for the bonds, but you also need to look at that bond amount and make sure you're covered. But then here's the other thing. With the increase of tariffs, there's also the increase of risk, is there not?
Absolutely, because of the risk for the surety and for the importer, obviously. They're outlaying more cash. Internally, a company, if they're cash strapped, this could cause major issues with the company itself and financial concerns when the surety's underwriting that bond. The
Mhm.
sureties are in the business to write bonds. There is that financial risk. It's a financial guarantee. So the bond can be saturated almost within like 45 to 60 days, just based on only 10% of the total duties, taxes, and fees. So that's why sureties underwrite. they need to protect their interest as well.
As you're going through there, I mean, one of the things that comes to mind is, people trying to transact business and on stimulating international trade and all. One of the things I will also say that comes into play as a tool, and we'll maybe come back to this in a little bit, but maybe the use of an ATA Carnet, which also has bonds to it. It helps to, if you're going to send machinery or samples or something that goes out to other countries and then comes back in, rather than paying duties and taxes on it coming back in on returns, or duties and taxes anywhere else in the world.
Right.
Again, that bond comes into play, but those amounts are going to be going up as well. So you got to look at things, I guess, holistically. We're talking predominantly right now imports, but I mean, you have to look at it on export. If you're doing business in other countries, if you're looking at non-resident importers or whatever else, that comes into play. So there's a lot of things. If somebody's looking at this and trying to assess their current bond amounts, should they reach out to you or reach out to your customs broker or what?
So, as far as the tips, we always say that they really should, of course, look forward rather than backwards, because that's what customs does. Having a sufficient bond is an informed compliance requirement. If they don't properly project, they'll end up with another insufficiency. And we've seen that, an importer may have gotten one in July and another one this month
Mm-hmm.
because they're not properly forecasting. I think the rule of thumb is obviously projecting and do their own math. They really need to estimate the duties, taxes, and fees they're going to pay in the next year, account for special tariffs like anti-dumping and countervailing duty. The customs broker is really their best source of information because they do the entries, right? They handle those entry transactions for their importer clients. So that is like the number one go-to is the customs broker. Absolutely. Importers really need to look at their bond amount regularly, in particular at renewal. Bonds
Mm-hmm.
renew, once a year.
Yeah.
So prior to that renewal, they should be looking at it so that it's terminated at renewal rather than midterm. Because we talked before the show a little bit about aggregate liability,
Mm-hmm.
where if an importer has a $50,000 bond, customs could require 200 and they just go with the 200 and the surety wants collateral. Well, that's a $200,000 letter of credit or cash that they have to put up. And then a few months later, they could get another insufficiency, say it's 400. Well, they would have been better off going with the 400 immediately because maybe the surety would require another 400,000 in collateral. That's holding up 600,000 in collateral rather than 400. So the old saying, it's better to be penny wise than pound foolish.
So people are not, I know there was this big push about, China. And what's interesting is over this past year, there's not been as much discussion on forced labor or use of forced labor. It's still there in the Forced Labor Prevention Acts and all of that that's going in. But companies have been moving away from China initially, not so much taking the existing stuff, but, any new products, they're looking for other sources. And of course, Mexico has really benefited from that, but going to other countries and all that. Well, now things are changing so rapidly all over that the compliance folks need to be looking at probably doing a quarterly review on their bonds, because just to look to see what's happening and trying to get a handle on it. But then secondarily to that, how do you communicate that to the executive management or especially to the finance area, the CFO and all, to say, here's what the impact is of these kinds of things? Would you agree with that? And what would you recommend?
Absolutely. The routine review of their bond amount for sure. And, I keep saying that people should project and I understand it's very hard because you don't know what changes will come about. Nobody has that crystal ball, right? But just forecast properly. Are you going to change your supply chain, to like you had mentioned from China to Colombia, Brazil, wherever, Mexico?
Mm-hmm.
Just keep in mind that things could change in a week or a day,
Mm-hmm.
right? So even though I keep saying project, I understand it's very hard for importers to do that, but to talk with their consultants, if they have a consultant or a customs attorney. I know many small importers do not.
Mm-hmm.
So the best source is their customs broker. They're the closest to, everything going on. The NCBFA has great information on their website. We have a tariff page on our website as well. There's all kinds of information out there, but it's very unpredictable. And the timeliness of everything is crazy, right?
Well, it is, but here's the other thing that I'm hoping people are getting past they're almost just worn out. There's been so much change in things that are going on and the static and all that. If anything, the compliance folks need to be that steady rock. It's like, okay, yes, there's all this static. What are we doing? And everybody's calling. So, well, what does this mean? It's like, as of this point in time, here's what we know. And take that
Right.
approach
Right.
and go through and say, all right, we've calculated this. Now, this was a month ago that this came out, and it's taken this much time to look at this. Here's what the impact is. And you've got to develop those relationships again with your pricing group, with your sales group, your marketing, with your finance folks in all of that, and look at the overall. This is what we know as of this point in time. Put that stake in the ground. There's been, we've had finish out your research and then you can look at it, because there may be a lot of stuff that comes out and it's not relevant. It's more positioning and
Right.
saber rattling, as I would call, between governments. In the end, I mean, the one thing that I also will say is that, talking about different trade agreements, things change on a positive end.
Well, that and we had talked before we recorded here that what are some tips on separating the risk too, right? If you have separate divisions, if an importer has separate divisions, maybe get a bond for each division, because maybe one's importing from a higher tariff country than another. So that could
Right.
minimize the risk on one bond versus the other. Or if there's anti-dumping, if they import a variety of products, but some are subject to anti-dumping and countervailing duty, maybe get a separate bond for that, because that's really high risk.
Well, and that is a great point. There's some companies you mentioned that there's a $1 billion bond out there and a $1.5 billion bond
Yeah.
with another company. And to me there must be some high dollar stuff, maybe trying to put one umbrella over everything. And in theory, that sounds simplistic and maybe easier. On the flip side of that, you could have a deal where you don't want your company's import privileges suspended or tied up because of one little case or situation. Case in point of an anti-dumping or countervailing duties case that snags the rest of it. So that's breaking up that surety risk, I guess. Sounds like a smart move.
Yeah, I think so. And two, if an importer puts some things in foreign trade zone, okay, for those entry types use a different bond
Mm-hmm.
than their regular consumption entries.
Mm-hmm.
But to talk a little bit about surety capacity for these very large bonds, there is capacity out there. Um,
Mm-hmm.
Surety companies have a treasury limit approved by the U.S. Treasury to underwrite federal obligations.
Mm-hmm.
That information is publicly available and published in the Department Circular 570. The company can write individual bonds up to their treasury limit. It's not all of their bonds, but per bond, their treasury limit, which is 10% of their capital in surplus. So there is capacity out there. Customs allows for co-surety bonds. So multiple sureties can go together on one bond to get to that high amount if they have to, if they're limited with their treasury limits.
Well, very similar to companies that are doing major capital investments of, like a building of some kind. There's lots of banks that can come together to finance that project. Same thing here on the surety side to keep things going. And that's well, anything else as far as communicating, to upper management and the impact there is like where to get the information, maybe as you're talking about, I'm sure using ACE, looking at the history as well as then projecting. You've got to work with your purchasing folks, your marketing, your sales, whatever, so you can kind of get a holistic picture, right?
Absolutely. And I would think that, with all the talk of tariffs over the course of this year, the finance people and everybody within any company is going to understand that, yes, this does have an impact on them, right? Again, the ACE, like you said, the ACE reports, as well as sureties get the information as well, but it's not real granular. It's real header information. So we can give summary level information, but your ASA reports, your customs brokers, that's another thing as far as underwriting is concerned, that sureties are in the business to write bonds, right?
Right.
Um, Even though it's a financial guarantee, we're going to request financial statements in some cases. But you look at the importer history too. We've been writing bonds since for 90 years. Many of those bonds we've written for decades. So
Mhm.
we have that information available on what have they imported in the past? Have there been claims? Are there PGA entries? The participating government agencies, they look at credit ratings. It's really a subjective review based on that importer history and the financial wherewithal.
Let me come in. I guess part of it's my background or whatever, but I want to mention also the ATA Carnets. If you are looking at a scenario where you're trying to stimulate trade, now, the one thing that's happening, again, whether you like the administration or not or whatever, there are trade deals now finally being, I guess, signed and all that. That means that there are definitely opportunities for U.S. goods around the world. With that, that means that you will have salespeople and you're going to go out to these conferences or to, companies or whatever, and you're trying to meet with people to stimulate trade, get orders, right? The use of an ATA Carnet is a great tool in international trade that will help you, I guess, make the deal, but also help protect your cash flow because it'll be a way to prevent or avoid having to pay duties and taxes. But you got to have a bond with that. And I will say Roanoke's operation there is really good. There's other Carnet operations as well. I just will say that the use of an ATA Carnet is definitely a good one to help you stimulate trade and protect your cash flow. So with that, any last words here to as we wrap up here, Colleen?
Well, I started out saying bonds are not boring, so I'll say that again. And the future takes time. We don't know what's going to happen going forward. I understand that it's hard to predict bond amounts, but between us, between customs brokers, that the ACE data, we're all in it together, and we work together to help the importers as much as we can.
Well, and one thing too is that companies should definitely be involved in trade associations that are, affecting change. They're keeping their hand on the pulse, if you will, on different changes or things that are going on. It's a strong way of being able to see what's happening and from a company perspective, try and add some influence to Congress and the administration and the agencies to I guess influence it positively rather than negatively. But I would highly recommend that. That's another way and the Brokers Association, the NCB FAA, this is the National Customs Brokers and Freight Forwarders Association, as you mentioned. It's probably a good resource for people. You don't have to be a broker to hit their website, and it may be a good source for some support. What do you think of it as far as that kind of thing? Involvement in trade associations. Is that do you recommend that or what?
Absolutely. There's the AAEI as well, American Association of Exporters and Importers. We have a surety association, the International Trade Surety Association. There's only 4 members, but we're small but mighty. We always say we write a good portion of the bonds on file between the 4 members. All of us work very closely with the NCBFAA. They have great information, and the leadership of the NCBFAA really goes to bat for all of their members and understands the issues, right?
Well, Colleen, thank you so much for being on our show. Folks, like us, share us, make your comments, and whatnot. We'll have some more information about Roanoke on our show notes here and all. But Colleen, thank you so much for being on. You're such a pleasure to. I'm sorry I haven't seen you personally for quite some time, but
yeah, you've been missing in action a little bit.
I know it. I need to get back into the middle of trade and some things, but
and you can visit our website too at roanokegroup.com for that tariff page and our bond calculator. So that should help importers as well.
Outstanding. All right. Say that again. It's the bond calculator, especially. I love that tool.
Yeah, it's in our resources within our website, roanokegroup.com. So that's available. And there's also a tariff and bond page in there.
Excellent.
Yeah, we always add those on the show notes as well. So in case y'all missed it, just you're driving or running or walking your dog or whatever when you're listening to this, don't worry. Just check the show notes, and you'll find links to the resources that were discussed here, including Colleen's contact information to her LinkedIn, and of course the website as well. So just to make sure that y'all didn't miss anything. So,
well, we got some nuggets of knowledge and some potential actions that we can take out of this show. So thank you again, Colleen, and everybody have a great day.
Thank you.
Thank you all.